Now, all of this comes as we kick off earnings season. We're starting to get some of those results in with the big banks slated to report this Friday. For more on what to expect, we have here with us in studio Victoria Greene, G Squared Private Wealth CIO. It's good to have you in person.
Absolutely. I know. I feel like we know each other. But
yeah.
First time we met.
Yeah. First time we met. Pretty fitting, right? We're talking about earnings season. The bar is pretty low going into this, but you say set yourself up for even more disappointment.
I do. I really see the markets hitting about 34, 32. I mean, Pepsi did surprise on the upside, so if maybe that's a little bit of an indicator that expectations have come low enough but we have the dollar. I mean, the dollar was such a headwind in Q3, and I think you've got a lot of tech companies that are going to struggle. So who's going to do well? Probably the energy companies. We will probably see industrials do okay. We've seen some, energy companies are going to continue to print money here at $80, $90 barrel oil. So I think the sectors are going to matter. Individual company performance is going to matter, and what their CEOs did. But I think it's like you got to check a box on what EPS is. But I think more so everybody wants to know guidance. What does this look like going forward? How much pressure is it going to happen with the dollar? Who's doing job cuts? I mean, it's expected Intel is going to announce job cuts to follow Microsoft, to follow Snap. So we're seeing a lot of job cuts cutting in the technology sector. Definitely nervous going into full earnings season. Financials really kick it off, and we'll see. Did they pick up net interest income, or are they having to put too many reserves, not seeing any mortgages? We've definitely seen the mortgages almost grind to a halt. And then investment banking has been just difficult this year. So banks may struggle.
Yeah, so the forward-looking statements are what we're looking for going into these results. But also, it seems to be there's still a bit of a debate, if you could argue that where exactly we are in terms of the macro picture. You had those comments coming in from President Biden saying that he doesn't expect a recession. Obviously, he's the president. He's not going to say things are going to get worse. But we also got those comments from Jamie Dimon, which seems to suggest there are more rough patches ahead. How do you view that?
So I think the fact the president said the R word, if you're a fan of the show West Wing with the bagel word, that nobody wants to say the R word, it's bagel time. But the fact the president is acknowledging it might be a slight recession, that has to mean they're even acknowledging the slowdown is coming. The Feds acknowledge the slowdown is coming. They're trying to slow it down to slow down inflation. I'm with Jamie Dimon. I actually think we're in a recession. I know we can argue the definition of recession, and that's technically Neber's job. But if you look at the slowdown, where we're going with growth, what's happening with inflation, what's happening with the hawkish Fed, definitely in Jamie Dimon's that there's a little more pain coming. Not sure I'm full IMF, right? They came out with hey, expect another 20% down, there's more pain coming. Everybody's going to feel recession in 23. Feel like that might be a tad draconian at this point, but I do think we're still going to see the effects. Remember, the lag between rate hikes and when we feel in the labor market is about 12 months.
So the question is, where do you position yourself if that slowdown is already underway? You've been bullish on energy for quite some time, and there's questions right now, especially with the moves that we saw from OPEC last week about whether things are really going to start to tick up. I mean, we have seen them tick up a little. Where are you positioned in some of those big names? Sure.
We did actually pull a little bit back to energy, but we're still overweight. We were very, very overweight. We pulled that back a little bit in June, but we still like a lot of, so we like the U.S. E&Ps, right? To get it out of the ground in the Permian area is about $30, $40 a barrel. And you haven't seen the rig count really jump up. We're at 765 total rigs. We're still below pre-pandemic levels. And the U.S. is now becoming a net exporter of petroleum products because we are picking up market share from what Russia's stepping back in. And there are some big sanctions coming in December from the EU, and it's going to hit the shipping and the tankers because they're not going to insure them. And if nobody's insuring an oil cargo, which I believe something like 95% of insurance is issued by the UK in the Euro area. So I see opportunity in U.S. energy producers. We liked our Devon, Diamondback announced the acquisition today. We really like Cheniere. It's a natural gas exporter. We think the gas story, because we feel like the story of energy security for the next decade, yes, EVs are coming, yes, solar's coming. Have we hit peak oil demand? We'll see. But we also see the slit that we need people buying energy from allies, and we're dealing with that with Saudi Arabia right now. That is Saudi Arabia really an ally? Or to sound like my millennial self, are they a frenemy? Like we're friends with them a little bit, but in reality, we're not really. And if you look at the geopolitical macro view, you have major players that we may have massive political shifts in. We have Saudi Arabia, we have Iran, and we have Venezuela. And we're slightly, not saying this is a grand decision and picking sides here, but we're slightly warming up to Venezuela because we realize Saudi Arabia really is not working in our best interest right now.
Yeah, I mean, we did hear the president comment on that yesterday, suggesting that there could be more moves coming against Saudi Arabia on the back of that decision. So, energy, it sounds like you pulled back a bit, but you're still positive on it in this environment.
Yes.
What are some other names that you think are getting overlooked right now that offer real value?
And I love my Costco. I'll talk about Costco anytime I can.
I love my Costco. Not the stock itself. I'm talking about the company.
And not even the $1.50 hot dog. But they're also picking up inventory. So this second Amazon Prime Day that we've gotten is not just because Amazon is trying to be nice to us. They're trying to dump inventory. Everybody's got inventory. Nike's got inventory. So the Costcos and the TJ Maxx of the world that are kind of the off-brand, they're not beholden to any brand names. So they're picking up cheap inventory and they're moving it. They're a discount store. They're 75% in the U.S. The bulk of their international exposure is Canada, which has held up better. So I think they're going to have a little bit less currency effects. I like them. I like a really boring name, IBM. I think they're a great place to hide. They've got a strong dividend yield. I think as a service and a tech company goes, tech spending is going to continue. And because of the way they're positioned, I think they're going to see a little bit more sustainability in revenues, because that's what we're looking at right now. As we move forward and things get pressured, who's going to still make money and who's at risk of being cut? And so I think they're very well positioned. They're reasonably valued, but I think they still have a lot of growth. They've changed who they were. And people realize IBM is a very old company, but they've redeveloped themselves multiple times. They sold off Lenovo, got out of the PC business, and now they're in the hybrid cloud and AI and data consulting. And I see data and healthcare as a great place to be. And the last place playing defense is healthcare, like a United Health. Great name to be in right now. And again, a little bit less effect with the dollar. So some of these names that have more revenues coming from the U.S., I think also will hold up a little bit better.
Yeah, names from three very different sectors, but diversification is what we keep hearing. Victoria Greene, good to have you in studio today.
Yeah, thank you so much for having me.
Joining us from G Squared Private Wealth.